Here we are. It is 4 p.m. Pacific time, 7 p.m. Eastern time. Welcome for wherever you are logging in today. Nice to see you all here. We have our usuals and we have some new faces, new names. Hey, Javad, nice to see you again. Fantastic. Welcome to another JK Deal Reveal. And today, I hope you're going to enjoy it. Buenas tardes, Lenford. Hopefully you will enjoy today because it's going to be, it might be very exciting for some of you. And we're going to put a different twist on the deal reveal. We're going to do something we've never done before. We're going to show a deal that we've never shown before. And so without further delay, it's already 4. I'm already on Facebook. We're ready to go. Let me share my screen and show you what we have in store for you today. So, for those of you who are brand new, I always like to give you a reason to be excited to be on these JK Deal Reveals. And this is it. Tell me, would you buy 15 properties for $1? Right, that's what we are going to be discussing today to see how we might and if we still want to do that. And so here we go. We are getting excited. Why? Because we are going to lightning fast analyze deals. We're not going to be stuck in paralysis analysis. We look at a deal, we look at the numbers, we look at the area, and quickly get a sense of what's happening to jump rapidly into the next step and outperform the competition. And we're getting even more excited because we are doing it in a market. You're going to see today an opportunity to buy 15 properties for $1. And if that's not 4 times better than Canada, I don't know what is. But we are more importantly making investments where the numbers make sense. So today and every time on our deal reveal, I want you to tell me, is this a deal or is this no deal? 15 properties for $1. Tell me, blow up the chat on me here. What do we think about that? Who would be all over that? 15, yeah, deal already, Sergio says. All right, it's already a deal. All right, so I am going to show you that even if you can buy 15 properties for $1, doesn't necessarily mean it's a deal, but Maryse is curious, and so am I. I certainly was when I came across this. It obviously wasn't advertised as a $1 portfolio, although it could have been, but it wasn't. So let's see what we have here. And I want to give you some context actually to this portfolio. You've probably heard me say, and if you haven't, it's about time, that your network is your net worth. That in this business and any business really, there are people behind these properties. There are people behind these businesses. Getting close to the people is how you get close to the deals. It's when people know not only what you do, but who you are and how you operate, what are the values and what's your mandate, what's your vision, and people really connect with you on the Ford, family, occupation, recreation, and dreams. If you can connect with your Fords, that's when it really happens. Now, why do I say this? Because I came to know about this portfolio because I attended a networking training event, a very intimate, high-level network training event with some individuals, and just going to talk. These are individuals, these are Canadians, and got to talking. Yeah, we do U.S. real estate. We've been tell our stories. We're at this networking event, so we obviously have some dreams connected. This is a mindset development, business training event. So clearly, our occupations, well, not clear, but our occupations are aligned. We're both in real estate. Our recreations are aligned in the sense that we do personal development. We love doing trainings, and our dreams are aligned. We're bettering ourselves. We're bettering our lives and the lives of the people around us. So we're connecting on 3 out of 4 right out the gate. And obviously, we talked about family along the way. So we're connecting, right? We're building friendships. And although this was only the third time. This was the 3rd time I met this person at other networking events, but we hadn't really had the opportunity to connect with Ford. And you notice that nothing happened until we connected. So I cannot emphasize how important it is to build a relationship. So we had the opportunity, we connected. I had the time to explain what we did and so forth. And it wasn't even him. It was his wife. Said, hey, are you interested and we've got these properties in Michigan, and would you be interested? We're looking to, it's not going all that great, and we're looking to to sell. Are you interested? And I said, well, at the time, I said, well, not terribly interested, because they're residential properties in Michigan, in Detroit, actually. And at that point in time, we weren't all that interested. And so kind of let it go. We talked a little bit about it, but not too much. But then after discussions, and if we can help them out, we can help them out. So we got into it, and they sent us these properties. And so this is basically what they sent from this point on, okay? And I'll tell you a little bit more about the story as we go into it. And so this is basically what they sent. So networking, 1, 2, 3, building on Ford, building a connection. Basically, the partners on this portfolio want to sell. And I spoke with 2 of the 3 partners at this point. One partner says there's a little bit of work needed, that's fine, and collections are difficult. The other partner basically says that actually management is to crap, didn't use those words per se, but rents are not being collected, okay? And so there's no income coming in on these properties, okay? So right there, what are we thinking? We're thinking negative cash flow. There's no income coming in, and there's still expenses, right? You still have to pay the taxes. You still have to pay the insurance. If something breaks, you still have to fix it. So there are still, and maybe occupancy permits and so forth, just the shit expenses on the side. It's still costing. So they're in a pickle, right? But more than that, or more interestingly as well, this portfolio get to talking, right? And through the relationship, this is how you connect. That these properties were purchased with private capital, and so they have a very close connection with the finance element, right? They know the people who basically own the mortgages. It's not like a bank. It's not a credit union. It's individuals and it's investors that they know, and they bought this portfolio, and they're giving 12%, or it's costing them 12% interest on this portfolio. They bought at about $25, $30 a door at the time, a couple years back, and now they had the portfolio evaluated with these numbers here. So this is what they say, or their realtor, because it's being advertised for sale. This is what they're advertising it at to sell. So we have here a total of $923,000 worth for these 15 properties. And they have a note, they have a mortgage at 12% for a total of $750,000. Now, these are all verbal. We haven't confirmed these numbers, but that's what we're going on at first. So what are we thinking? We're thinking, well, if you can buy something, or let's just see what their current debt to value ratio is. So if they owe 750 and it's worth 924, they're at 81% leverage right now, or they have 19% equity at that price point. Okay. They're not collecting any income, right? Not only do they have taxes, insurance, and maintenance to pay, they also have 12% interest on this note, right? Now, 12% interest on 750,000, right? You're following here. 750,000 at 12% interest is $90,000 US a year negative cash flow, on top of their taxes, 13,000, on top of their insurance, 8,000, which is a little low, plus their maintenance, 18,000. So right now, they're digging themselves a hole of about $130,000 a year by owning this property. And so get to talk to the owner, one of the partners, and we did a quick brainstorm on different things we can do. We're sizing each other up and say, we can do this, we can do that, we can do this. and he's proposing some things that obviously won't hurt him all that much, right? So if we buy him out at the value of the portfolio, he's good, right? He he's cashing in some of his equity. He'll have so he'll pay back his lenders 750, and the balance is just going to recoup the loss that he's been suffering for the last, well, take a look. This evaluation was done here in November, so for sure at least 3 months he's been just digging out this big hole at least. And they took the decision in November, which means it probably was happening before that. Anyways, it's hurting. It's really hurting right now. And so let's take an example of, this is a portfolio which has fairly high leverage, but definitely a high interest rate to pay. So let's consider this as a situation where there's lots of debt. So if a property has lots of debt, you want to be thinking, how can I work this debt? How can I restructure this debt? How can I take over this debt, if it makes sense, to buy the real estate at a very decreased amount, like $1? So in the discussion, it came into play, like, what if I buy your company for $1? So not buy the real estate, but buy the entity, buy the company that holds the real estate for $1. Now, what happens when you buy the entity is that you buy everything that that entity has with it. Yes, you can buy potential, liabilities. You can buy lawsuits that are going on in it. You're buying the entity and everything that comes with it, including the mortgages. So you could buy this portfolio for $1, and you would inherit this $750,000 loan at 12%. You would inherit the problem. But what's your down payment? $1, right? And you wouldn't have to go looking for financing because it's already in place. Now, if you were able to, if you have a management team and you have expertise to turn this around quickly, it wouldn't hurt all that much. You can get it back cash flowing quickly. Well, that's an assumption. Hopefully you can do that. And that would definitely be the goal, because you don't want to be running at 130 negative a year. But if you take a look at this, and let's just take a step back and just take a look at these numbers real quick. We're not today going to dive into every specific property. We still want to make sure we're buying in a good location. We still want to make sure that these values are solid. We always want to be buying under market value. So if a realtor's advertising this, is probably market value, so we want to buy below. But let's say we bought the property, the entity, for $1. We're effectively buying at 20% discount, because we'd be buying at $750,000, right? The debt comes with it, so we'd effectively be buying at $750,000. So we're buying with 20% discount. So let's say we're buying at a discount, but we're certainly not buying positive cash flow on the onset. Okay. So let's look at this financial to see if anything pops out. So take a look at this and let me know, does anything stand out? This is the interactive portion. So this is what the seller provided. Are we just trusting this right outright? Or are we going to challenge some things or ask or question some things? So why are these properties vacant, Dom asks? Because the manager decided to stop sending the money to the owners. Okay. They took advantage of a bad situation, and it's not a pretty situation. It's just not going well at all. Oh, the properties aren't necessarily vacant, by the way. They're to my understanding, they're very much occupied. They're either not paying, rents are not being collected, or they're being collected, but they're not being sent to the owners. Okay, either way, not a good situation. But what does that scream? It screams motivated seller. All right, it screams opportunity. So look at these numbers. Do we see anything that stands out through your experience? I see 3 things for sure, and there's some conclusions to draw from these 3 things. Pardon me. Come on. There's over a dozen people live on the call here, and everyone on Facebook. What do we see? No? All right. Let me hold your hand. Let's start here. So remember, expenses on a property, it doesn't help it's in French. Okay. We have the value, the monthly income, supposedly, the annual income, the taxes, the insurance, management, maintenance, annual, net. Okay, annual expenses and net income after expenses. Okay, Sergio, so there you go. So first thing, in Summit, what's missing? Well, your management here is at 0. Okay, first of all right. Granted, they might not be paying a manager that's not issuing and that's not remitting the rents to them, but nonetheless, if we're going to look at these numbers and we're going to run our own, we're certainly going to have management. And in Detroit, management is closer to 12% on average on residential rather than the flat 10%. It's just, it's a harder market, and the managers know that they can get away with higher, and so they charge higher. So that's not there. It's definitely going to affect the net that's being proposed, obviously, right? Take off 12%. What else? We see here that there's a tax of $80 a year for this property. There's a tax of $50 a year, $69 a year on this property. I got a feeling that these are typos, or these are the monthly taxes, okay? So in a spreadsheet like this, these numbers, they just kind of flow in and you might overlook it. Don't overlook it. So we're missing almost $1,000, $2,000, $3,000 in expenses here. That's going to affect your bottom line as well. So we basically have 100. So that's easily 1,000 a month. So that's 12,000 a year missing here. Another 3,000 here missing. So what are we at? We're at 15,000 difference. So this is not a small difference. I like that the maintenance is there at $100 a door, a month a door, and insurance is a little low, but let's just fly with it. We might be able to take over an insurance policy and just swing in it. For example, if we buy the entity, we're just taking on their contract, so that's fine. But right there, $15,000 difference. So right out the gate, I'm not at 100, I'm at 85 net. Okay, really gross numbers here. If we buy this portfolio for basically 750,000, and it's generating 85,000. My keyboard's not working. 85,000, and we're paying 750. It's basically at an 11 cap. If we bought it at the asking price right now at 923.85, we divide it by 923, we're at a 9 cap. 9 cap, 11 cap. Does anybody see a problem? Anybody see a problem buying a 9 or an 11 cap? You might think, oh no, that's wonderful. I love those numbers. Because in Canada, do we have 9 caps in Canada? Do we have 11 caps in Canada? Well, certainly not in Montreal and not in any major urban center. So what's the problem? The note, the mortgage is at 12%. Yeah, that's right. The interest rate is higher than the cap, right? The interest rate is higher than the cap. And so even after you bring this back up to full performance per these numbers, we're still negative cash flow. And it's an interest only at 12%. So you're still negative on pro forma. That smells like a disaster. All right, it smells like a disaster. So moral of the story, just because you can buy it for $1 doesn't mean you should, okay? Because it could still be negative cash flow, and you could not have good terms and rates to actually, over time at least, build equity and build an investment. And two, you still need reserves. Even though you buy something for $1, doesn't mean you should, because you're buying almost $1 million worth of real estate, and the rule of thumb is that you should have 10% of its value liquid on the side just in case stuff happens. So we're almost talking about 100,000 that you should have available liquid just because you're touching something that's worth $1 million, okay? So just keep that in mind. But moreover, you'll notice one of the partners said the properties are actually not in super good condition. They're rentable-ish. They need to be cleaned up, and just, they can use a little bit of love. Not full makeovers, but a little bit of love. So on top of that, the numbers are even worse. So 750 plus $1 plus the repairs needed, let's say the way they were talking, 3,000 to 5,000 per property sounds all kinds of reasonable. So another 50 to 75,000. So we're at 850,000. We're about at a 10 cap and it's costing 12 at Performa. So am I interested in buying this company for $1? No, I am not. Am I interested to try to work something out? Absolutely. They have a direct connection with their financiers, right? With their private lenders. And so they're already losing $130,000 a year. So what are their choices? We can stay firm on our numbers. Look, this is something that generates 85,000 a year, right? 85,000 a year. And listen, we buy 15 caps. Okay? We buy 15 caps. So at a 15 cap, I'm ready to pay cash $566,000 for your portfolio. What do you think they're going to say? Do you think, well, they might say yes, but what does that mean? It means that they would have to pay us close to 200,000. Well, they would lose 200,000 in that transaction because they still have to pay back their private investors, their private mortgage note holders. And so they would have to come to the closing with $200,000 to sell this property. But on the cash flow numbers, and that's a performing, by the way, a performing 15%, which this is not. So the cash number would probably be a lot lower, even though the value of the real estate is 900,000 approximately. Residential real estate holds its value, even though it's not performing. It's not like a commercial 5+ unit under commercial lending, but that's a different story. So I can give 500,000 cash and get you out of this pickle, but they're likely not going to accept that. Or what we can do is, let's buy your entity for $1, and I'm not going to pay a single dollar on your mortgage, on your 12%. You negotiate, you take the hit on your mortgage, you hold those payments, you make those payments while we fix up this mess, okay? And tell you what, we'll pay you that interest later. After we fix this problem up, we're going to reposition it. We're going to fix it up and we're going to refinance at its full value. Only at that point are we going to pay the interest for your investors. Okay, so that is a way for you to completely remove the cost. This is a proposition. This is not a done deal. It's just something that could be offered and could potentially work for this seller. They're already negative 130,000. You have to understand that. So what's now only being negative 80,000, but with the confidence that you and your team can do the work and get it done. But meanwhile, I don't want to pay 12%, even if it's deferred 2-3 years out, right? So I'm going to immediately start to reshop and refinance, see if we can do something, and maybe I can find some cheaper private lenders, etc., to make it hurt less, to repay at least a portion of that. And we can write up that if we prepay earlier, we have less to pay back, for example. So we're offering a proposition where either you take a big hit now, cut your losses, it's going to cost 200,000 to cut your losses, or here's an opportunity where in 2 years, you'll break even, right? In between, yes, you're going to have to deal and renegotiate what you have on your side, but at least you're not putting yourself at risk to fix up someone else's mess. Is there an opportunity here? Yes. Are they motivated? Very. That doesn't mean you should buy a negative $130,000 portfolio cash flow. So let me hear what you have to say here. Is this a deal or a no deal? What do we have? Deal or no deal today? Pretty exciting though, huh? To see that these are opportunities. The bigger the problem, the bigger the opportunity, the bigger the reward if you happen to be the solution to that problem. Danielle says no deal. Complex, but there is potential, says Sergio. Well, I'm of the opinion that buying this for $1 is certainly no deal. If that's just what's happening, I'm not putting myself or my investors at that type of risk. Dom says high risk, move on. Lenford says headache. Excellent. Well, I'm telling you that I'm pursuing this deal and I'll see where it goes. I never, no deal left behind. I'm a teacher, right? No child left behind, no deal left behind. When you're dealing with highly motivated individuals, you don't want to let that go. You just continue on. If it doesn't work, if they really don't make something that's a win for you, then you move on. We're way too early in the negotiation. We're still building the relationship. We're seeing how flexible they can be. There's a lot that could potentially be done here, especially in creative real estate space. So I'm saying lots of potential to a unicorn deal, but as it stands, I'm not touching it, even if I can buy it for $1. So hopefully that was fun. Hopefully you enjoyed yourself today. This is a very real deal that we're ongoing. And just so you know, I asked for some real numbers. You notice that these are all round numbers here. I want some actuals if I'm going to be diving any further. So I requested that, and that's where we're at in the process right now. So next free training, full hour-long training. I know I went higher today because we had lots to talk about, but next free training is on the fourth Thursday of the month. It's the 25th, and I'm going to be giving an opportunity presentation for you to see as a whole the investing in US real estate as an opportunity for you to jump into, because these deals are happening right now. The virus, as you can see, is affecting is infecting and affecting real estate, and this is the time for people who know what they're doing to jump in and position themselves to really set up their financial future. So if you're listening on Facebook and you're not already registered to the direct call, n4t.club/free training, that's how you do it. And basically the opportunity that's going to be presented is to come to our 2-day masterclass. And this is where we lay out the foundations. I talked about buying the entity for $1. That is only one of dozens of creative real estate strategies that you can use in the US to buy properties with no or low money down. So hopefully, if you haven't attended already, you can join. If you really can't wait till our next live event, which is going to be in mid to end March, you can go right now to n4tblueprint.com and get the recording, which also includes all of the bonuses that we've added on for our COVID special. And that includes the e-course, what to do before you buy your first property. Like, for example, in Facebook today, someone asked, hey, I'm going to the bank, but they want an address, a US address. What do I do? Well, that's in the e-course, all right? There are 4 or 5 different ways that you can give a bank a US address, even though you don't own a US property yet. On top of that, another bonus is that every week we have a coaching call, group coaching call, where you can come ask your questions live to me. We have our resource center with your scripts and your templates and your action plans, all the admins behind your real estate business. And every single call and training that I've ever recorded since we've started recording, is in the library for your reference, so you can listen back and take in, and so you don't lose a single beat since we've begun, so you can catch all the way up. There are hours and hours. I'm talking, at this point, it's almost hundreds of hours of content in there, all for you. So come in, enjoy the fun, join us in this wonderful world of US real estate investing now for tomorrow. If you have a deal that you'd like to submit that we analyze, we go through live on the JK Deal Reveal, by all means, go to our website, n4t.club or nowfortomorrow.club. And just in the contact form, just put in the property address, the price, any information you think is relevant to the deal reveal, and I'll take a look at it as if I was looking at it, because I am, always am. So thank you, everyone. Facebook is a wonderful way to stay in touch as well. Take care. It was really nice to have you, as always, from Mexico. Go get your miracle. Take care, everyone. Have a wonderful evening.